Hi everyone, my name's Jeff and I'm one of the traders here at stocktrading.co.uk. This is the first video in a series of trading videos for our VIP members. Anybody who completes this course should reach a point where they genuinely feel confident in trading the Forex markets with the right mindset, using sound risk management and a profitable trading plan, even if they're starting off with zero knowledge of Forex trading. So without further ado, let's get started with the first video. What is Forex? Okay, so what is Forex? Now a lot of people have heard the term, but don't actually know what it is, so let me try to explain. Okay, so you may have seen one of these at some point in your life. This is what's known as an exchange rate notice board. You often see them at airports, and they display the exchange rates for changing your money into a foreign currency. So for example, if you lived in the UK like I do, where our local currency is the pound sterling, and let's just say, for example, you may be heading to Spain on a holiday, what you want to do is you'll want to change up some of your pound notes into euros. So what you do is you'd head over to one of these currency exchange counters, hand them your money, and hopefully they'll hand you back some euros. So typically on these exchange rate notice boards, you'll see exactly how many euros you'll get for your own local currency. So as of today, filming right now, I believe the current exchange rate is roughly €1.10 to the pound. So if, for example, you were to hand over the person at the currency exchange counter £100, you should expect to get approximately 110 euros back. So in terms of what Forex is, it's simply short for foreign exchange. And it's simply the process of exchanging one currency for another. Now the Forex market is absolutely huge, and I'm really not exaggerating. Believe it or not, an average of 5 trillion US dollars are traded on the Forex markets every single day. And to give you some idea of scale, that's roughly 200 times the volume of trade that's made on the London Stock Exchange each and every day. That's right, 200 times the volume. The Forex markets are truly a global industry, with trading taking place around the clock. Forex markets are basically trading 24 hours a day, Monday to Friday. So what are all these Forex traders actually doing? Well, the answer to that is actually quite simple. They're speculating on whether the value of a particular currency will go up or go down. So in terms of Forex trading, how would you actually define if the value of a currency has gone up or it's gone down? Well, there needs to be some form of reference. So, for example, if I had £10 in my pocket and somebody told me a week later that my £10 was now less valuable than what it was a week ago, how would you know that unless you had something to compare your £10 to? Well, with Forex, what you do is basically you compare one currency against another currency. So, for example, if I can get 11 euros for my £10 today, but next week I could in fact get 12 euros for my £10, then what I would say is that the value of my local currency, the pound, has strengthened against the euro, because I can now get more euros for my money. Similarly, if I could get 11 euros for my £10 this week, but next week I could only get 9 euros for my £10, then I would say that my local currency, the pound, has actually weakened against the euro. So I hope that makes sense. So in terms of trading Forex, all currencies are always paired against another currency to allow you to define if one of the currencies is strengthening or weakening against its paired currency. So the illustration on the screen at the moment depicts a well-known pair of currencies, the Great Britain pound and the United States dollar. Now this pair of currencies are traded heavily every single day on the Forex markets, and I just want to bring to your attention the way that the currencies are expressed. So you'll see that they always appear in 3-letter notation. So for example, you'll see that GBP represents Great Britain pound and the United States dollar is shown as USD. Now generally speaking, it's pretty easy to identify a currency by its 3-letter notation, and in fact all of the major Forex currencies are very easy to guess what they are, with one exception, and that being the Swiss franc, which is represented by the letters CHF. Now this particular currency is known as CHF because the letters CH actually represents Confederatio Helvetica, which apparently is Latin for Swiss Confederation, and no doubt I've absolutely butchered the pronunciation there, but there you go. Currencies are divided up into major, minor and exotic currencies. There are a total of 8 major currencies, and these are the most heavily traded around the globe every day, and most people will be familiar with all of them. Okay, so what are the 8 major currencies? First of all, we have the euro, which is commonly referred to as the fibre in Forex speak. We also have the GBP, Great Britain pound, which is commonly known as the cable. We have the AUD, which is the Australia dollar, commonly known as the Aussie. We have the NZD, which is the New Zealand dollar, which is often referred to as the Kiwi. We have the very well known USD, which is the United States dollar, which is known as the buck. We have the CAD, which is the Canada dollar, which is actually known as the loonie for some reason. And we have the CHF, which, as I've just explained, is the Switzerland franc or the Swiss franc, commonly known as the Swissy. And finally, the 8th major currency is the JPY, which is the Japanese yen. And I should just point out that the currencies that you'll see on screen right now have been ordered hierarchically by the ECB, or the European Central Bank, and I'll explain why that's relevant in a moment. Now, as well as having the 8 major currencies, Forex traders also have what are known as the 7 major pairs. These pairs are the most commonly traded currency pairs in Forex, and all of the major currency pairs always include the United States dollar. Now, the 7 major Forex pairs are as follows: GBP USD, the pound to the dollar; EUR USD, euro to the dollar; AUD USD, Aussie dollar to the US dollar; NZD USD, New Zealand dollar against the US dollar; USD JPY, United States dollar against the Japanese yen; USD CHF, so that's the United States dollar against the Swiss franc; and the USD CAD, which is the United States dollar against the Canadian dollar. Okay, so you may have noticed this, and I've got a question for you. Why is it that sometimes the US dollar is on the left and sometimes the US dollar is on the right? Good question. The first 2 pairs you can see on screen right now show the EUR USD and the GBP USD, whereby the USD is to the right. But then you'll see the USD CAD and the USD CHF, where the USD is to the left. So the reason for this is actually the order of currency hierarchy set out by the ECB in 1999. They decided that the 8 major currencies would be put in a particular order, and this is the order that they decided upon. So the 8 major currencies were the euro, the pound, the Aussie dollar, the New Zealand dollar, the US dollar, the Canadian dollar, the Swiss franc, and the Japanese yen. And so effectively what happens is the dominant or most important currency out of the 8 major currencies is the euro, and you'll find for all currency pairs the euro will always be on the left hand side of the /. So that's always going to be the case. No matter what the euro is paired up against, you'll always find it to the left hand side. It is the dominant currency. Second in this list, which is the pound, you'll also find will always be on the left hand side, except when it's paired against the euro. So if you look in the examples at the moment, you can see the euro against the pound. The euro's to the left, as it always will be, and the pound is to the right. So for all currency pairs, the pound will always be to the left hand side unless it's paired up against the euro. So similarly, if we look at the Australian dollar more often than not, in fact almost always, will always be on the left hand side, except if it's paired up against the pound or the euro. So if it's paired up against one of those 2 currencies, the AUD will be on the right hand side, but other than that, For any other currency pair, you'll find it on the left hand side. The same applies for the New Zealand dollar. You'll always find it on the left hand side, except if it's paired up against the euro, the pound, or the Aussie dollar. And if we get to the US dollar, which is always involved in the 7 major currency pairs, you'll find that for the vast majority of cases, the US dollar will be on the left hand side. However, if it's paired up against any one of those 4 dominant currencies, it's going to be on the right hand side. So that's just something to bear in mind. Okay, so what's the relevance of having one currency to the left and one to the right of the forward slash? Well, for all Forex currency pairs, we have what is known as a base currency and a quote currency. Now, the base currency is always on the left, and it's always represented by 1 unit of that currency. So, for example, on the screen right now, the base currency would be the euro, and that would be represented by 1 euro. Now, to the right of the forward slash is what's known as the quote currency, and that's expressed as the actual exchange rate of the base currency. So, for example, it may be shown as $1.10, which means that you could exchange 1 euro for $1.10. Now, as I said at the start of the video, this really is just like exchanging your money for a foreign currency, as you would do if you're about to head off on your holidays. Now, in real monetary terms, we always deal with currencies to 2 decimal places. So, for example, £1.22, or maybe $1.22. Now, when dealing with Forex trading, most Forex brokers, who are the companies that you actually place Forex trades with, usually display currencies to 5 decimal places. So, for example, they may display the pound to the dollar as £1, which would be the base currency, against $1.22105. Very specific. Now, I will explain why this is so important in the next video, but for now, just be aware that generally speaking, you'll see the quote currency expressed to 5 decimal places. So, as I said right at the start of the video, Forex trading effectively allows you to speculate on the strength or the weakness of the base currency against the quote currency. Now, as I already said, the base currency is always expressed as 1 unit. But I'm just going to stop and ask you a question. Based on the GBP USD exchange rate above, if the price moved to £1 against $1.22125, did the pound actually get weaker or did it get stronger? So I just want you to think about that for a second. Okay, so let's imagine it's 1 PM and the current Forex exchange rate of the pound against the dollar is £1 against $1.22105. An hour passes by, it's now 2 PM, and the foreign exchange rate is now £1 against $1.22125. So did the pound strengthen or did it weaken? Well, the answer to that is the pound got stronger, because you would now get fractionally more dollars for your pound than you would have an hour ago. So if you think about it, if you opened a buy trade on this pair and then you close that trade, which means that you sold back your pound, 1 hour later you would have made a very small profit. Let's look at another example. It's 1 PM and the pound to the dollar rate is £1 against $1.22105. An hour passes by and it's now 2 PM and the rate is £1 will get you $1.22085. So did the pound get stronger or did it get weaker? Well, the answer to that is the pound got weaker. So in this case you would now get fractionally less dollars for your pound. So if you think about it, if you opened a sell trade on this pair and then you close the trade, which effectively means that you bought back your pound, 1 hour later you again would have made a profit. Now, I do appreciate that for some people that may still come across as slightly confusing. It can feel confusing to begin with because the base currency to the left always stays at 1 unit, whilst the quote currency to the right is constantly moving up and down. So I appreciate it can be slightly confusing. However, it does often help if you visualize this on a graph. So here's a typical example of a chart depicting the pound against the dollar over a 1-day period. Hopefully you can see that the overall trend of this graph is a downward trend. So the price of the quote currency, which is the dollar, started off at somewhere around about 1.24200, and by the time it finished at the end of the day, or at least when I took a screenshot, the price was around 1.22657. So let's say you wanted to execute a sell trade, and basically you wanted to sell the pound because you think that it will weaken against the dollar over the course of the day. Well, the way it could be judged to have weakened would be that as the day progresses, you get less and less dollars for your pound. So if you were a Forex trader and at the start of the day the price of the dollar was 1.24200 and you speculated that this value would go down, then you would have executed a sell trade, which is basically to sell the pound. And this graph depicts this. You get less and less and less dollars for your pound as the day goes by. So in this example, if you would have sold the pound, you would have made a profit. So moving forwards, and to make this as simple to understand as possible, then based on the current price of the graph, if you expect the price to go up, you would buy the pound, whilst in contrast, if you expect the price to go down, then you would sell the pound. In the next video, I'm going to explain in more detail exactly how you could have made a profit on this trade. Okay, so this brings me to the end of the first video in the Stop Trading course. I hope you've enjoyed it and thank you for watching.